What's going on, apes? Welcome back to the channel. This is the most important AMC update video you will ever watch. Now, in this video, we have to go over some key details that were just released that does signify to me, and especially after the day we did see today, that the AMC short squeeze is getting even closer than we all do think, as well as go over the stock O tracker data, give you guys my expected timeline of potentially seeing a gamma squeeze, but I do think we're getting closer to the short squeeze nevertheless. So let's not waste any time getting into it. The only thing that I ask is that you hit that like button for me and help push this video out to even more apes, because this is very important information that every single ape is made aware about. Now, getting into the video, guys, we obviously seen AMC have a very great day today. They went up 6.37%. Literally at the same time the market was completely tanking today, you seen AMC start to rally. And this is something that I've been talking about on this channel for a very long time, and what I do expect to happen once you do get that short squeeze, as we all do know, the stock market as a whole is due for a crash or correction of some form of the other. Now, what this is going to happen to hedge funds and institutions that are short on AMC, I do think we're going to see that divergence. So you're going to see AMC stock going up as the overall market is coming down. So a lot of these hedge funds and institutions, they are not only just short on AMC, they have a lot of other stocks in their portfolios, and they often use those as collateral to stay in their short positions. That is how they hedge their positions. That is what a hedge fund does do. They don't just play one stock, they have multiple different stocks, usually across all different segments. Now, like I said, they're going to be losing money when AMC is going up. They're going to be losing on that end, but they're also going to be losing on their collateral to help them stay in these short positions, as well as just seeing their overall portfolio's values going down. So they're going to be highly incentivized to actually exit one half of their losing trade, which would be AMC, while they're already losing on the other end and all the other stocks they are investing in. So I think you're going to see this rush to get out of their short positions, and especially AMC, and especially after the move we did see today, really helps to solidify my whole thesis that I've had on this channel for a very long time. Now, we did get new details. This is from Wells Fargo, that they're actually shutting down its customers' personal lines of credit. Now, this is huge. We are going to read exactly what they said and what they are going to be doing, but this overall gives you the red flag that these banks, they're not going to be willing to take the fall for a lot of hedge funds and institutions, or even people that are highly over leveraged. And they do think, like they said today by one analyst, that they expect even a 5% crash before earnings happens. Earnings is really going to be kicking off in about 1 to 2 weeks time. The banks do usually go first, and then you will see other companies start to go after, and I do believe the banks start earnings in about 1 week time. So these analysts, especially the Wells Fargo analyst, is calling for a correction of about 5% within the next 2 weeks or so. But what they said about shutting down the personal lines of credit, they did say the bank is shutting down all existing personal lines of credit in coming weeks and no longer offers the product, according to customer letters reviewed by CNBC. The product, which typically gave users $3,000 to $100,000 in revolving credit lines, was pitched as a way to consolidate higher interest credit card debt, pay for home renovations, or avoid overdraft fees on linked checking accounts. With its latest move, Wells Fargo warned customers that the account closures may have an impact on their credit score, according to a frequently asked questions segment of the letter. Now, like I said, this is very important because Wells Fargo is seen as the riskiest bank there is, because they do own a lot of their loans on their balance sheet. They don't usually sell them to companies like Fannie Mae and Freddie Mac. When you actually buy a home loan, if you're going through Wells Fargo, odds are they actually keep those loans on their balance sheet, as well as car loans and other things like that. They don't sell them off to third parties most of the time. So it's not a surprise they are the first to be doing this, but I do think you're going to see other banks step in and start to do this as well. So this is a huge red flag, probably the biggest red flag you could ever get, that a lot of people, hedge funds and institutions alike, are severely over leveraged, and the bank is simply not going to be willing to take that fall for these people. But something that is even more important, that has quite frankly been blowing under the rug as far as today, this actually did come out last night, and it says China's cabinet says it will use RRR cuts to support real economy. Now, they are talking about cutting the reserve requirement rate for banks in China. And why this is so important is because China is the second largest economy, right behind America, which is the first largest economy. And what usually happens in China happens in the United States as well. Think back to the 2008 recession. That was a worldwide recession due to mostly the fact of American home loans being bundled together, very risky loans. Once people defaulted on those, the whole world had a huge impact, because quite frankly, a lot of people in China and around the world invest in America because it is seen as the least risky way to invest your money. So we're going to get into exactly what they said, how this is so important, and how it does pertain to AMC stock. And quite frankly, they did say China will use timely cuts in reserve requirements ratio RRR to support the real economy, especially small firms, the cabinet said on Wednesday. The People's Bank of China, PBOC, has been gradually scaling back pandemic-driven stimulus to curb debt risk, keeping borrow costs low and telling banks to remain support for small firms. China will, in quotes, use monetary policy tools, including RRR cuts, in a timely way to further step up financial support for the real economy, especially small firms, the cabinet said in a statement after a regular meeting. They also went on to say there's room to cut reserve requirements, which would help release long-term funds and encourage banks to lower financing costs. Now, why this is so huge, like we said, China is the second largest economy, and when they do these rate cuts, which they don't do very much, or very often I should say, you see the overall global stock markets go down about 5 to 20% as soon as they do this. And this is not just my opinion, this is real facts here, and how this really Now, they also go on to say there is room to cut reserve requirements, which would help release long-term funds and encourage banks to lower financing costs. Now, why this is so huge is because every single time you see China cut rates, that is a telltale sign that they are having problems in their economy. And every single time they do this, you have seen a crash in our stock markets in between 5 and 20%. Now, this is a fact. We're gonna look at this and how this does directly correlate with our stock markets, but I want to reframe back before we do get into that on how the fact that these hedge funds and institutions, they have long positions in other stocks. So once those stocks go down in value, like we said, the collateral goes down, AMC is likely to go up, like we did see today, that divergence where AMC goes up and the stock market goes down, making the hedge funds and institutions lose on both sides. So if we can try to pinpoint when this stock market crash is likely to happen, that is likely when we are going to see the AMC short squeeze. But getting back to the China rate situation, in 2019 they cut rates a lot. Starting in about August, they cut once, twice, 3 times in 2019. Now, keep that in mind, guys. Let's go to the S&P 500. In 2000 or late 2018, this is not when they actually cut rates. This is the whole China-US trade war situation. We've seen a bit of a crash right here, but when they did start to cut rates for the first time over here, you did see about a 10 to 15% flash crash going from April 28th, almost 3,000 on the SPY, down to a low of March 26th of about 2,700. So that was a decline of about 10% in the stock market in less than 1 month's time, only about 2.5 weeks time. And then you also did see this when they cut again, and this was around August 11th, you did see about a 7% decline in a very fast and rapid fashion. And then obviously, as we do know, the pandemic happened, and that was this big crash that you do see right here. But every single time you see China cutting rates, you do see the stock market start to sell off. Now, they have not cut rates in quite a while, but there is definitely room for them to cut rates. Their rate is currently at 3.85%. So they definitely have room to cut rates, and I do think that is what is going to happen if they cannot stir up the overall economy. Now, let's get into this whole gamma squeeze situation and how the option chain does currently look. And like we had talked about, July 9th, I mean, these contracts will expire out the money. About 24,000 will expire in the money. Unless we have a really good day tomorrow, then you could definitely see some gamma activity, but not a full out gamma squeeze. Now, I do want to draw your guys' attention to July 16th, and like some of these Wells Fargo analysts are saying, within the next week or two, we could see a 5% correction in the S&P 500, as well as this does align, like I said, with July 16th. We have 75,400 contracts that are in the money. We do have out the money at 260,106 contracts. So this would align with everything we are looking at, as well as we do have some catalysts from AMC stock. We do have that UFC fight being displayed in 95 AMC theaters this weekend, as well as we do have Black Widow going to theaters tomorrow, this Friday, July 9th. So these could be huge catalysts once we do get those blockbuster numbers that are expected to get sent out come Monday morning. So that could have a huge impact on the stock. But something else I do want to point out when it comes to all these out the money contracts is that we actually see a lot of activity from the $60 strike to the $70 strike. So if we can really get some momentum for Friday and get a huge day, I'm talking 5 to 10%, that's going to be a pretty substantial day as far as right now. It looks like the stock market might sell off, so we're probably going to see that divergence. But if we could see a lot of these $60 calls go in the money, that will be a huge step in the right direction. We've seen about 14,000 in volume alone, so there's definitely people watching these contracts, and I do think tomorrow they are likely to start flipping into these contracts, because as you see on the Stocko Tracker data, you usually see a lot of these out the money contracts. People will sell out of them and then roll that over to a further expiration date, the next one over, which will be July 16th. Now, like I was saying about the actual strikes on the option chain, you see a lot of activity at the $60 strike, and then at the $65 strike, you see a lot of activity as well, about 5,700 contracts that are held in people's brokerage accounts. But once you get to 70, that's where you see a lot of activity, from 70, 75, 80, 85, 90, 95, and really over 100. Now, this is only my projection. I don't know if this will happen. I'm giving you guys the facts here, and what it really comes down to is market expectations, what these market makers expect AMC, or how much they expect AMC to move. If you are buying these $60 calls, and these market makers, especially Citadel, are collecting $158, they're not going to start hedging these contracts, because a contract, if you're buying one call, these market makers, if AMC were to get over $60, they would have to sell you 100 shares at $60 by this expiration date. So odds are they're not hedging any of these contracts with actual shares to sell you. So if we can get up to that $60 price point, I think you're going to see a lot of hedging that is going on, and ultimately see a bit of a gamma squeeze. But if we can really get over 70, that is where you do have a high chance to actually see a gamma squeeze, as well as, like we were talking about, if we do see the overall stock market start to come down, as well as AMC going up, that's a double-edged sword for these short sellers in AMC stock. So that is what I do think will happen, guys. Now, that is pretty much all for this video. That is really what I wanted to express to you guys, is the double-edged sword situation I do see that is going on right now, and especially after today, we do see that confirmation. We even see AMC climbing in the after hours as we currently do speak, up 1.84%. When we started this video, I believe they were down 0.75%. So we are likely to see a huge day tomorrow going through the rest of next week. And as you guys do know, you're going to see a lot of traders and FOMO buyers coming in and buying the stock, which I do think is happening right now. So this is getting very exciting. Make sure you guys are ready to get this thing done and stay in these positions. Like I said, I'm not a financial advisor or a financial planner, so don't listen to me sell out whenever you want to. I am not your dad or your financial advisor, like I said. But with all of that being said, let me know what you guys think about this information in the comment section, as well as like the video, consider subscribing as well. Now, if you guys want to stay up to date with the moves that we are making in AMC and all these other great stocks, check out the link for the buy and sell alerts. You'll be notified in real time every single time a trade is bought or sold with stocks, options, and crypto, whether that is a day trade, swing trade, or an overall long-term investment. As well as, if you guys want to get free stock, check out the link for public. No deposit necessary, no need to even link a bank account. Get up to $70 in your choice of free stock, and they also do not route your order flows to companies like Citadel. They go straight to lit exchanges, so you guys get the best pricing possible. As well as deposit $100 with Webull, get 4 free stocks, each of them potentially worth up to $2,400 a piece. That is why I do have those links. But that is all for this video. I will see you guys in the next one.